current regime, what we've seen is a financial stability, exchange rate stability. We've also seen the difference between the domestic interest rates and the global interest rates. It's probably at its lowest. While we've been able to manage a very, very strong banking sector and, probably the most well capitalized we've seen in times, we still don't see the debt market or the bond market flourishing as much as we would expect them to. The reason being there's a lot of capital with the pension, insurance, and mutual funds, but I think most of them are very restrictive capital. So, you probably invest only in a AAA or only in a listed or a particular kind of credit. 90% of our bond markets, even today, is, BSFI segment. Infrastructure access to the bond market is still very limited. Most of it, which we've seen over the last 3 to 4 years, is refinancing. And thanks to, some of the domestic institutions which have come in place, like NAFBIT, ASEEM, IIFCL and all of them, there is now at least a market for operating assets to come. The HAM road projects which came and the capital structure which government gave work pretty well in terms of the other capex. But if we see the capex of the other segment coming, it is right now being funded more by equity. So I think we need to work on a long way in terms of how the entire debt market restrictions of every kind of category comes down for it to be able to have the sizable money coming from each segment. We're talking about the retail participation and the family office, but it's too small for the kind of projects which we are looking to put on. So I think that's one thing. We also see the state also have the infrastructure as one of the biggest promise to the community. And the kind of funding they require to build these roads, whether, when it's not done by government, is huge. And there's a lot of restriction in terms of the fiscal numbers which state have to adhere to in today's time. And therefore, I think that's again a very big funding requirement in terms of bond issuances which has come. We've seen that in power in past, where some of the losses were, of course, funded by bond market. And now, given the power dynamics, that's changing. But we see a lot of fundraising which will happen by states to ensure that the infrastructure comes in place apart from private sector. Hence, there's going to be a crowding of the issuance, and we would look forward for a very vibrant market for that.